Hey everybody, Tom Gentile. Welcome this evening to what will be the last webinar that we're doing for 2018. So I want to welcome everybody here. This is one that we didn't expect to put on the docket, but Rob and I were on the phone last week, and he insisted that we do another webinar to kind of do a review, and also because some of the things he talked about back at the beginning of December actually came true, maybe a little quicker than we expected. So, Rob, welcome.
Thanks, Tom. Appreciate it.
So let me just set the rules here real quick, and then I'm going to turn this over to you, Rob. We're recording the webinar. I'll get the recording out to everybody as soon as we're done this evening. Also, if you have questions, feel free to put them into the Q&A box, and we'll get those out to you. Again, we'll get your questions answered as soon as possible. And finally, a disclaimer that you do see on the slide tonight. Really quick, just let me mention a couple of things here. Stock and options trading has large potential rewards, but also large potential risk. Also, keep in mind that myself, Rob, Jay, everyone associated with Tom's Trading Room LLC and Optionetics, we're here as educators to you. We teach you how we trade. We're not investment advisors. We do not give specific trading advice. And everything we're going to talk about tonight is in US dollars unless noted otherwise. So, that being said, Rob, I'm going to go ahead and turn the presentation over to you. You should have the control right now.
I just said show my screen. Can everybody see it?
I'm still waiting.
You don't see my screen yet?
No, Jay, do you see it?
No, I still see the 2018 partner webinar with Rob Roy.
Huh.
All right, then we'll do this. Oh, there you go. You're on,
okay.
Rob.
I just redid it and it worked the second time. Okay, cool.
Awesome.
We're good to go?
All yours, buddy.
All right. Sounds good. All right, everybody. Thanks for this. And as Tom said, it was a little bit of an impromptu one, but the reason that I wanted to come back and do this, and I really appreciate Tom making this happen. Obviously, getting this close to the holidays, and all of you that are watching, is when we talked about where the market was going through Elliott Wave just not that long ago. Things have happened just exactly as Tom said, spot on with what we were forecasting, if anything, just a little bit sooner than what we had talked about. So what I thought I would do is go back a little bit this time, give you a little bit of history, and then also talk about where the markets are. And everything that I'm going to talk about has actually been pre-recorded. It's on YouTube. None of the things that I'm going to talk about or share with you are Monday morning quarterbacking or armchair. Everything was done ahead of time and can be verified by looking at YouTube videos. So when we had this run up in the market going into October, and this is not necessarily one of my favorite patterns. I actually like to stick with the Elliott Wave patterns, and the Elliott Wave consolidation pattern is a triangle. However, a lot of people look at flag patterns, they look at pennant patterns in addition to triangles. My favorites, again, are the triangle patterns, but we had this really classic pennant pattern, and the reason it's called a pennant pattern is you can see it looks like a baseball pennant, right? When baseball teams win their division, they get a pennant. And it looks like that. And we had this time frame here where we're going up and things were getting really, really quiet from a volatility standpoint. And again, all this has been pre-recorded. You can see it if you go back and look, talking about how something's getting ready to happen. We have this pennant pattern that's tightening. The market is extremely quiet. We are going to break out from here. And then we had the big breakout move. And we stayed within the corrective patterns. And that's the thing that I want to focus on most, because people that have been associated with Elliott Wave are quite used to the wave 1, 2, 3, 4, 5, where we had the wave 4 buys and sells. We had the wave 5 buys and sells. We didn't focus a whole lot of attention on the three primary corrective patterns, which are flats, zigzags, and triangles. And yet that's where the market has been since then. So we did have this pennant pattern moving to the upside, and then we went into a really classic zigzag pattern. So I'd like to just go through and build everything going back to the beginning of October to where we are now, and then fill in a little bit of my own golly, all the advertisements that jump up on your screen now, but going into my own history on where I have learned from Elliott Wave, and I owe an awful lot of this to Tom, and I think that I don't know if Tom has shared this kind of stuff with you before, but when he and George started Optionetics, their idea was to educate individuals on the world of trading options. My background was a financial advisor. Years ago, I was a golf pro, then I transitioned into being a financial advisor. I learned options on my own, but found out that traditional financial advisory firms don't want to focus on options because they have this old antiquated view that they're risky. And then when Tom and George created Optionetics, they created this incredible world of education. And then Charles Schwab comes in, buys everything out, and says, hey, we don't like the world of education. We want everybody to come to our advisors. And so things kind of ended. And that was a real shame, because what Tom had conceived was creating a great world of education for individuals. And I think that if you focus on this, and things are interesting the way the world works. Tom and I were pretty close throughout those days. Then we kind of went through a period of time where we lost touch with each other, and now to come back into the fold is really neat, and to find out that he's like this smorgasbord of financial information for all of you people now. And if you're not involved in his program, you should be, because so many of the things that he has going on are exciting. Obviously, I'm excited and passionate about what I do, but also really interested in learning from him about the other things that he has going on. And the conversations that we've had since the last time I talked to you have been fascinating. But anyway, let's get back to what the main focus is for tonight. And then we had this downward move in the market, and I'm going to go ahead and use the Fibonacci retracement tools. This is Integrated Investor. And again, if those of you that have used this in the past and maybe haven't renewed your data feed, making a big mistake, in my opinion, you should do that. So here was the impulse move, and I'm going to talk in the words of Elliott, which are impulses and corrections. And we had this impulse move to the downside, and then we had an absolute perfect, as you can see, 50% corrective move. Most people are used to corrections being to the downside, but in the world of Elliott, a correction is a move against the previous impulse move. So in this case, the corrective move was actually to the upside, and so that was our B wave. And from there, you then go and use the extension tool to figure out where you're supposed to go from here. And with that, you can see that the C wave extension it just blows me away. Still to this day, after all the years of doing this, it still blows me away. And there's the C wave extension, right dead to the 100% extension. So that zigzag pattern worked classically, and sent out to subscribers these trades exactly along these lines. Again, everything that I'm telling you is not just words. It's all documented. It's all been put on videos ahead of time. There's no back testing, no Monday morning quarterbacking going on. All this was done ahead of time. People can verify everything that I'm saying. So that was a classic pattern. So my point is that there were times, and Tom, sometimes I think that maybe you're a little bit ahead of your time with Optionetics and presenting this Elliott Wave stuff, because we used to get jeers. People would kind of giggle a little bit about Elliott Wave. And if I could take a minute to tell a story, when I first came to Optionetics myself was back in 2000, and I was just transitioning away from being a financial advisor. So all of my trading was still primarily based on fundamentals. And Thomas scheduled me to work with a guy named Mike Perot. He was a Canadian kid, young kid, like 25 years old. And we were doing a seminar together, and we met in the lobby the night before. I'd never seen this guy before, never met this guy before. And we sat down and we started talking, and we were talking about the markets and everything, because that's what traders do. They talk about the markets, and he started getting into this technical stuff when he started talking about Elliott wave, and I kind of did that thing. I kind of did the whole the giggle sneer thing, like whatever, dude. Let's just talk about trading in general. But he was insistent, and we went back and we looked at the computer, and he showed me where he thought the market was going to go. And so what I'm going to do is I'm going to go back in time now to something that was extremely important in my own trading. And so you can see this was on September 6th of 2001, and he's showing me the NASDAQ composite. So we're at a seminar out west. I'm pretty sure it was Seattle. I'm not 100% sure on the city, but I think it was Seattle. But we're sitting there, and he shows me then this is where the screen was on September 6th of 2001. And then he shows me where the market is forecast to go, and this is the NASDAQ, and we're forecast to go, I mean, you can see in a very relatively short period of time, all the way down to this 261% fib extension level. And I was like, whatever. I actually was starting to feel like I'm kind of here with a crazy guy, so I'm just gonna go along and say, yeah, oh, okay, and go along with what he was saying. But here's a young guy, he's much younger than me at the time. In 2001, I was 41 years old. So, I'm thinking that, what does this guy think he's going to show me? And it was bizarre the way the whole thing unfolded. Well, you all know what happened after that, right? September 6th of 2001. We all know that September 11th was not too far around the corner. So September 11th happens. And then on September 21st, lo and behold, the NASDAQ hits the exact price on the exact day that he had showed me back on September 6th. And not only, hitting the price, but the amount of price movement was phenomenal. And I had remembered that conversation. And from that point in time, I actually called him and said, hey, I thought you were full of what, but I am blown away that what you showed me came to fruition in such an exact format. Tell me more about this. And that, honest to God, was my introduction into Elliott wave, Fibonacci extensions and retracements, etc. And he spent a great deal of time talking to me about this. And I'm going to get off track a little bit now because I tend to get a little bit emotional about this. But again, this is a true story. I was doing an advanced seminar with Optionetics with George, and we always did everything at the Palms in Las Vegas, which I always was frustrated about because the Palms sits off of the main strip. But Tom owned like half the condos in the Palms or something, so we always did all of our events there at the Palms. And so at the end of the day, we finished our first day with George doing the advanced class, and it was an advanced class on options. And so I'm done, and I'm going down to get something to eat. And as weird as this sounds, this is 100% true. So I'm coming down the elevators, and I start to walk out, and right in the corner, and I'm sure Tom remembers this, being as there as much as he was, in the corner there's this little cubbyhole, and there's a psychic. And so I was like, whatever, I got nothing else to do, right? I'm not going to go down to the strip. It's way too far away. I got nothing else to do. It's entertainment, right? It's an entertainment value. I'm going to go in there. And what I haven't told you yet was that guy, Mike Perot, was killed in a motorcycle accident a couple years after I had first met him. He was going around the corner, riding a motorcycle. A car had come across the center line, head-on collision, and he was killed. And so, we're obviously a really sad day for the whole Optionetics family. But I go in there and I sit down with this lady, and she starts holding my hand, and she's telling me that, oh, what do you do? I see you. And the reason I'm doing the pauses is I'm trying to reiterate exactly the way she said it to me. She's like, I see you on a stage, in front of an audience. Now, when we did the Optionetics events, educational events, we were on a stage in front of people. So that was fairly accurate. And I'm always used to this kind of stuff almost being like zodiac things, right? You read it in the paper and it's general and everybody can apply it to their own lives, and thought it was BS and everything else. And so she was saying these things, and I thought, yeah, I guess I do seminar events. So yeah, I'm on a stage in front of people. So that's fairly accurate. And about this point in time, She pauses, and it seemed like about 10 minutes. I'm sure it was only a minute or two. And she's holding my hand. She's dead quiet. And I was literally about to get up and walk out because I thought something strange had happened to her. And then she comes back and talks. She goes, I got to tell you, I'm also a medium, and somebody's coming through for you. And she goes, it's a young man. He used to work with you. He was killed in a motorcycle accident, but he's aware that you reference him in your work, and he appreciates it. He wants you to know he appreciates it. So again, my pauses there were because that's exactly the way she was telling me about it. And I tell you, the hair on the back of my neck stood up. It was bizarre because every event that I've ever done in the world of trading or technical analysis, especially when it's involved with Elliott Wave, I reference him because he was the one that really significantly introduced me to it and mentored me into it and taught me all this. And I swear to you, that is exactly how that conversation went. And it was, you can believe whatever you want to believe, I don't care, but that was the most bizarre thing that I've ever experienced when she was talking about how, he's aware that you're talking about him and he appreciates it and all this. And oh man, it was an amazing thing. But when she comes up with a young guy killed in a motorcycle, that's pretty freaking specific. Anyway, so that was just something that I wanted to share as far as how this goes and the fact that he really was. Tom had hired him years ago, and it was a life-changing event for me, meeting this guy and understanding this and working for Optionetics, et cetera. But let's go back now. Okay, let's get away from the crazy stories and go to the market. So we've already talked about the fact that we have this absolute classic zigzag pattern, and then the last time we talked, we said that from this point, the market then went into the other or one of the other corrective patterns, which is a flat, and it's about as classic as it could be. So there's the A wave, then we came back here for the B, and then we went up to the C wave right here, and lo and behold, not only did we have the completion of the C wave in the flat, we have a doji on the chart representing indecision. So if you wanted to label this properly on your charts, that's an A wave, this is a B, and this is a C. I should mention that I told that story about what happened with that psychic lady in the advanced class in Las Vegas there at the Palms. And when I went to her, there was nobody around. And after I told that story, the next day after the event ended, as I was walking by there to go back to my room, there was a whole line. I think everybody from the event was lined up to go talk to her. It's fascinating. So anyway, here we are here, and this is exactly where we were when we talked last time, when Tom had this last event. And we had just started to the downside, and so I thought this was a impulse wave to the downside. Tom asked a specific question, if you remember right, do you think we're going to 255? Now that's obviously on the SPY, which is 1/10, so we're on the SPX. But he said, is that where you think we're going? And I assume that was because that was a level. I mean, Tom didn't just pull 255 out of his head, so that was a level that he felt the market was going to as well. And I said, well, that's what it looks like where we're going. So let's take a look at exactly what happened. So we started down, and then we had another perfect 50% correction. So here's that impulse to the downside. This is where we were last time, right? And took my finger off of it too soon. I do want to show you with the moving averages where I think we may go between now and the end of the year. But so there was the downward move, and then here was the corrective move exactly to 50%. So we have another 50% correction, exactly like we had in this first zigzag pattern back in October. And then where does that leave us as far as the projected move to the downside? And this had not happened yet. This is what we were talking about. is where we're going to go. And look where we went on the C wave. We went right down here exactly to the 100% extension. I mean, dead on the nose for 2 days. That was both on the 17th and on the 18th of December, where the lows touched the 100% extension dead on the nose. So that's the completion of the zigzag. That's everything that it's supposed to do on the zigzag pattern is a 100% extension. But sometimes we have what are known as extended C waves, and that's when we move to 161.8, which is the next fib level. So there's your B wave correction, and here's your C wave extension. We talked about this. You can go back, watch the recording. If some of you that are here weren't on the recording with us the last, what was the date, Tom? What was the exact date? I'm sorry, I should know exactly what day we were talking about, but go back and look at the recording that we did just a couple weeks ago, and you will see that this is exactly what we were talking about. And he came on, and we had this whole conversation, and it's exactly where we went. So from here, now I've got subscribers that send out alerts to, and we traded this downward move. I did not do anything or did not participate in this move from the 100% extension to where we closed today. And let me explain why. And the reason why is normally when you go to a 100% extension and then you're going to have an extended C wave, normally you will come down to this level and retest the previous level. So what normally happens, not always, nothing's 100%, is that you will go back up, test the previous level, which is 61.8, which is right at 2,600, which if you've been listening to the financial networks is what a lot of guys have been talking about. Why are they talking about it? In my opinion, everybody knows that that's the Elliott wave number that we've been talking about as far as being the resistance and support level. And it's certainly where we were when we hit the lows back in the end of October. But usually you'll go back and test that previous fib level before you go down to the extended level. So just in full and fair disclosure, I did not participate in this move, nor did the subscribers, because I expected us to go back up and test that level first. Now we came close, and maybe close should have been good enough. On the 19th, the high was at 28 or 25.85, so we missed it by 15 points on the S&P. But normally those lines actually get touched, just like they did back here on the 7th of December when we hit that 50% correction, and just like they did both on the 17th and the 18th when we touched the 100% line. Usually those lines get touched. They didn't get touched. So in my opinion, what I'm thinking now is that we have a good chance at this point in time going into the end of the year where we may rally up from here, go right back up to that 61.8% level where we're supposed to go, and then come down and hit that 24.15 roughly level. Maybe it'll be the beginning of the year when that actually happens. We're moving into a very, very quiet time as far as volume in the markets, and there's a lot of conversation. You've probably heard these words before: never short a dull market. When you have a very quiet market, it tends to drift to the upside. Usually it takes more volume to push things lower. The Santa Claus rally, all these different things are all talking about the exact same thing. It's the fact that the market tends to drift up at the end of the year because there's so low volume. So the never short a dull market, Santa Claus rally are the exact same thing, depending on how you may have heard it. So the possibility is that we go back up there, and then I get a chance, because I'm aggravated at this point in time that I didn't catch today's move. But I didn't catch today's move because I was following the rules. But let me ask you something. If you would have made, and this is the truth, and again, this is all verified and documented. It's all in webinars. It's all on YouTube. If you would have had 4 successful downside trades on the SPY, 4 downside trades on the SPY since the end of October, or since I guess the beginning of October when the market moved to the downside, are you going to be that upset? Well, that's just the way traders are, right? Because I mean, we want to be right all the time, and nobody's right all the time. But the truth is, I've had 4 successful downside trades just on the SPY, not counting anything else. And then I'm sitting here and I'm aggravated because I missed today's move. But you follow the rules. And is it better to have missed a positive trade than to lose money? Of course it is. It's a silly question, but it's the truth. So we come to the downside here on today's move. We have not hit the 161.8% level. Maybe we do that tomorrow, and maybe I've completely missed this entire move from the 100 to 168% move, but I have nailed every move up till this point. And you know this if you listened to us a couple of weeks ago. This was the target that we talked about. Tom specifically mentioned it in his commentary, so you know that's accurate. But if we violate the rules and we go straight down to the 161.8% level, that's a trade you missed. But a trade you missed is not a loss. A trade you missed might be an opportunity not taken advantage of, but it's not a trade you lost. So I'm still staying positive. I'm still thinking that we are going to follow these rules, and then at some point we're going to go up and test that level, and then maybe we come down here. We'll see how it plays out. You know how things played out last time we talked. Let's see how it goes this time. Just before we started talking, there was a text that the House passed the spending bill. A lot of people were thinking that last part of the downward move today was because it looked like maybe the government was going to go into a shutdown. The Senate still has to pass it. They haven't passed it yet, but the House did. We'll see if that plays out. We'll see if any of that has anything to do with anything other than the fact that maybe traders are done for the year. They're going to go home for the holidays. Volume is going to drop off dramatically, and maybe the market lifts back to the upside. If that wasn't enough, let's take a look at the moving averages. And I'm going to take this blue line off because it's right on the green line here. The lime green line is the 10-day moving average. And a rule that I have always followed in my entire trading career is no security in any time frame gets very far away from the 10-day moving average. It just never happens. Nothing. And I don't care if we're talking currencies, commodities, equities, nothing gets very far away from its 10-day moving average. So that's where the 10-day moving average is, where I've drawn that red arrow, so that lime green line. Look where we are in the market. Look at the low, look where we closed. That's a big gap as far as the 10-day moving average is concerned. So one of two things is going to happen. Either the market's going to go sideways and allow that 10-day moving average to come down and catch up, or we're going to rebound and we're going to go back up towards that 10-day moving average. Well, if we happen to rebound and go back up towards the 10-day moving average, it wouldn't be too far away to hit that fib level at 61.8%, would it? So we'll see. I mean, we'll see how things trade out from now till the end of the year. But one thing I know for sure, we're oversold right now. There is no doubt about it. We are oversold. Go back and watch the 10-day moving average. Pick up any chart that you can on any equity, any security that you're looking at, and go through and look at your 10-day moving average. And you will see that what I've talked about is true, is that nothing gets very far. Look where we were here. Right back here in the market in February. We're low. Where did the market go? Right back up. And then we got above it, and then we came down, and we got below it, and we came back up. Just we don't get very far away from the 10-day moving average for very long. It just doesn't happen. So I think that scenario could very well play out, that we at least rally back up. Now, maybe we only rally up to the 100% level from here, and then we move down. So technically you could say that, well, you went to the next fib level. That's possible, but normally it's the fact that we go up to the one previous to where the extension was, and the extension was 100%. So, some people will tend to kind of work the rules into where they think they should be. But from my standpoint, we need to get back up near 2,600. And if we get back up in the market to 2,600, I think it's a great short until we come down to 24. And once we hit that level, then we have to reevaluate. From there, could we have another extended level down to the 261.8? We could. That's what happened on September 11th in 2001. Or maybe that's the end of it. Maybe that's the end of the move. But what I do think we need is a bigger spike in the VIX. So we had a spike today. We actually finally got above 30 for the first time since this move, this downward move started. But look what happened back in February. Look where we were in February. We got all the way up above 50. So we haven't had that cathartic capitulation, whatever you want to talk about. We have not had that massive volume on the low where everybody wrings their hands and says, that's it, I've had enough. And everybody dumps stocks and they want to run as far away from them as they can. They want nothing to do with stocks. That's when things usually mark a bottom, when everybody's just completely had enough. We're not at that point yet. We could get there with a spike higher in the VIX, but I just don't think 30 is high enough to consider that. And then when we go back and look at the SPY and bring volume in, you can see, yeah, we're above average volume today, but we didn't even get to the volume that we had back here on the 11th of October, on this first low of the impulse in the zigzag pattern to the downside. But see how that plays out? See how that goes in line with what I was talking about? So here's the down day. That was the end of the impulse wave on the A. Where has the highest volume been over the last, not just several months, but right there on the same day? That's the biggest volume we've had, was that move down. And that was the end of the A wave impulse. And we went up for that B wave correction and we came down to the C. And look what happened on the volume. Do we have higher volume? No. So what did that tell you? We've got a new low. We don't have a new low or a new high in volume. So we got a new low in price without the confirming high in volume. What happens? We move back to the upside and we get the A wave of that flat that I illustrated for you. And then throughout the entire flat, volume is lighter. So all this stuff goes into play. It all makes sense. This is not going back. And that's always been something that I've heard from people that said, oh, well, you can make technical analysis look at whatever you want. You can go back and make the charts look whatever way you want. No, that's not true. The charts, if you understand the rules, the charts do what they're supposed to do. And you know this if you were on the last event that we did a couple weeks ago, because we talked about these targets ahead of time. And this is exactly where they went. And this is not going back and saying, oh, well, let's fit the charts to where what the market did. Nope, they did exactly what they were supposed to do. And now we're actually interested to see what happens from here, because we are way overextended. We are oversold as far as the technicals from the markets. So I would love to see a move back up to 2,600. I'll go short much. I do a lot of strangles in my own trading, where I use the optimum delta, which is in the 25 to 30 range, because the gamma is the best from that area, and took all the puts off today. And basically the way it works is when you put on a strangle, you get the call on the put. We've had this huge downside move, so the puts have already made all the money. So the positions are all profitable. Some are slightly profitable, some are really profitable. You take the puts off, and if we do get the rebound, the calls that have almost no value regain value, and it actually increases your potential return. So you'll know ahead of time. I'm just telling you right now what I've done. You'll know over the next couple of weeks whether or not made any more money or not. But one thing you do know is on the downside move, the puts performed extremely well. So I like to talk about what we're doing ahead of time, and then you can see how things play out. We'll see. From a technical standpoint, we're definitely in an oversold range. But wow, when Tom brought up the 255 range on the SPY, and then it had exactly where the fib extension was, and that's exactly where we went. Just fascinating to me. I've been doing this for 20 years now, and it still blows me away. It's still amazing to me, the way the technical analysis is so accurate in forecasting things. And when you use like Integrated Investor, right, when I go through and do searches for creating trade candidates, you can put in fundamentals as well. So some of my old training, way back before the original days of moving into the Optionetics world, where I was exposed to trading technicals for the first time, now you can combine them both. So it doesn't matter whether you think technicals are more important or fundamentals are more important. I don't think anybody would argue that if you have both, it can't be anything but a good thing. In other words, if you created a bullish position and you're looking at a bullish chart from a technical standpoint, and you know that the underlying fundamentals are strong as well, that cannot be a negative. It can only be a positive. And you can argue which one is more important, but isn't it a better thing if you have both? So if you have a good bullish technical chart and you have strong fundamentals in the equity that you're looking at the chart, has to be a good thing, and it's been proven to work out significantly well over a long period of time. Am I running long? I heard some breath on the other end there.
Oh no.
Oh, okay. So going back to the chart of the VIX, I wanted to show the VIX again as the high there that we had on the 30. I think we talked about this. If not, I should have showed you this before. As we had this descending triangle on the VIX, with that low being right down there around the 16 level. So there's the low. Let me extend this upper trend line. So there was the descending triangle that we had on the VIX. And the interesting thing is a lot of people think that from a technical standpoint that you look at things differently from the VIX than you do from underlying equities. And that's not true. It's the same thing. You apply the same patterns. So look what happened here. We had this breakout, and then we didn't get the follow through or confirmation that we normally get. We came down, we tested this upper trend line, and then we moved to the upside from here. So if you follow the rules of triangles, what you take is you go through and you measure from the low to the high on the mouth. And the mouth is the wide part. So the high there, let's say, is 29, and then the low down here at 16, so that's 13. So when you take 13, you take 0.80 of 13. So what's 0.080 of 13? Anybody got a calculator close by? I'll look it up here on my phone. Man, what did we do before we had calculators? It's a sad state of affairs, isn't it? So that's 10 points. So 10 points from the point goes from 16 to 26. So from 16 to 26, we're already above where we should have gone from the breakout. If you take, now the reason I used 80% is here are the numbers on one of the triangles. When you have the mouth of the triangle, you measure the mouth of the triangle. And so the mouth of the triangle was 13 points. 75% of the time, you will break out the exact mouth of the triangle. So where did we close? At 28.38. So almost at 29. That's almost dead on 100% of the mouth of the triangle. But 90% of the time, you'll move 80% of that. So that's what we use as the target when I'm looking at a pattern that has a triangle for a potential breakout with one of those triangles, is we use the 80% level because it has a higher percentage chance of occurring. So in this case, basically, we went the full 100%. So again, from the triangle standpoint, we have satisfied the breakout, meaning that that's another scenario of, well, maybe we are over the next few days, if not week between Christmas and New Year's, going to bounce back a little bit in the market from this oversold condition, because the VIX is also saying that, meaning that we have reached the 100% breakout point of the mouth of the triangle. So from that standpoint, I would say that it's more than likely over the very near term now, after the first of the year, we reset and we'll see what happens from there. But over the near term, it looks like we're more apt to move to the upside than the downside from this point in time. We're in an oversold condition. The VIX has hit its breakout target. Looks like maybe we want to try to move to the upside. And I've already told you that I took all the puts today off of the strangles that we had. I closed out the SPY, as painful it is to admit that. I took the downside SPY trade off when we hit that 100% extension, so I did not take advantage of the downside move today. So I'm just being extremely honest with you on what I'm doing with the trading and what I'm doing for those that subscribe to follow along with what we're doing. So that's where we are. So you'll know if we bounce back to the upside that, hey, we're making a little extra Christmas money or holiday money moving in towards the end of the year. So let's see how it plays out, and maybe Tom will be good enough to have me back again, and we can take a look and see what's happened over this next week or two with what we're talking about at this time, just like we did last time. I mean, I appreciate the fact that they're able to bring me back and go through this with you. I just felt that it was really important to show you that, wow, things is, and I just want to stress that this is not me. All I'm doing is reading the charts. This is Elliott wave and Fibonacci retracements. I just have spent time learning it and understanding it, and I'm just sharing with you what the charts are showing you. But I'm a big believer in technical analysis. I think technical analysis takes the history into fact. I think technical analysis takes the majority of traders and volume into play, and we're just looking at percentages and what is likely to happen, because there's nobody that has any system that's right 100% of the time. But we don't have to be right 100% of the time in order to make money in trading, do we? We just have to be prudent, and we have to follow along with our system. And that was one of the things that I learned from Tom from a long time ago, is systems trading. Have a system, create a system, get good at your system, and follow it, and stay true to it, whether you're right or wrong. And in this case, we just happen to be really right. That's always a lot more fun when you're right, but that's how things have worked out. So anyway, Tom, if you're listening, that was what I wanted to share with the folks. Awesome. I appreciate you giving me the opportunity to go through that. I appreciate that a lot.
I have a Mike Perrott story too. I'm going to tell it here in just a few minutes. Jay, are there any questions that are that you see that you might think may be good to ask Rob before I grab the control back from him?
Well, there's Mike asking how they follow along with you, and I told him that you're going to explain that here in just a bit.
Oh yeah, I got something else. I got another little breaking thing. And Rob, I didn't ask you about this, but I'm just going to beg for forgiveness instead of ask for permission. Bonus thing. So
isn't it women that usually do that?
Well, first of all, I want to let everyone know that that Rob, Mike, Jeff, the whole gang will be back the first week of January. We're going to do an extended 2019 outlook. And so my plan is to have everybody back the first full week of January. It'll be another 3-day event, but we're going to be looking forward to 2019, and we're going to do some long-term outlooks there. So Rob, make sure you bring your weekly charts with you.
Okay. Yeah, that'll be fun. I look forward to that.
Cool.
Yeah, no, there's no negativity there. I'd be excited about that.
And I want to let everybody know and Rob, I'll get to it in just a moment before with something I'm gonna have to pin you up on the wall for. We've been doing different bonuses to our folks that sign up for our early bird partner program offer. And last night we did something with Keith Fitzgerald, and what we did there was we're going to be adding in his volatility mastery series to our partner program. But what I want to do with you is something just a little bit different than what we talked about 2 weeks ago. Everyone that already signed up for the partner program, if you signed up for gold or platinum, you're going to get this included. So for those of you that are just joining us, what is our platinum program or our partner program? Well, it's basically comes around a couple of different components: personalized training with myself and the group through mastery courses that we do, and those are going to be basically specific trading techniques from the best instructors that I think are out there, including Rob, who we've added into 2019. As Rob there's nobody better that can teach Elliott Wave and can teach what we call contrarian trading. We also have a live webinar feature that actually is part of our software package. And if you look at the specifics, what we're doing is we're doing our courses that are going to start in January. Mike Wade's going to start off with straddle mastery. Devin's going to come in afterwards and do credit spread mastery. Then Rob's going to be in, and he's going to be doing his 5-week Elliott Wave mastery, which is also including that integrated investor. It's going to be it's not integrated investor. It's a new mobile version. It's a new one that's on the cloud. I think they're going to call it Profit Source Mobile. It's brand new. It's going to have some additional features on it. You're going to be able to use it on not only a desktop or a laptop, but a device like a tablet or an iPhone.
It's going to
So
be so cool. It's
yeah,
amazing.
that is the new feature, and that's going to be included. A year of that's going to be included with Rob's scans. Jeff Beamer's going to come in afterwards and teach counter mastery. Joe's going to finish up the year, or he's going to finish up the 5-week programs with collar mastery. Then I'm going to be in October and do my system mastery course. Now, all of these come with scans, all right, with proprietary scans by each of the instructor. Those are included as well. You're going to get 1 year of our software, which is our complete trader software with the professional piece, that real-time module added on. I do monthly conference calls with you guys. Those of you, you're all partners. Everybody that's been here for the entire month of all these bonus classes, you've all been partners in the past. You're the only ones that are here. This is the only time we're offering this. Is this renewal is to our current and past partners. So you'll see that about the 1 year mentoring webinars that we do. About the real time modules that I add on to the TradeStream piece, and the robo algorithms that we brought out this year. You also know that I give out my cell phone number for the year, so that's included in this program as well. The bonuses that we added for 2019. Well, Rob's doing Elliott Wave Mastery. If you joined us back at the first week of December, we were discussing this. We were discussing the Profit Source Mobile. We also talked about 3 new partner program insider deals. So these are things that I bring in with my friends that you just can't get anywhere else. So we've got a new alternative investment opportunity. We've got a prop trading investment opportunity. And then I mentioned the last couple of days, I brought up this cryptocurrency, which is backed by gold, or backed by a gold mine. And so we were discussing that over the last couple of nights. And I'll share with you a little bit more about what that is in just a moment. But we're also going to be doing a 3-day Oasis event. Rob's going to be there. Mike's going to be there. Jeff, myself, Joe, the whole gang's going to be there as we do this once a year get together. This year, it will not be at sea. It will be on land. It will be in Orlando. The hotel resort will be to be announced. We're going to have that out to you by the end of January. So this program, we're looking to do it the first full week of December. I believe the dates were the 7th, 8th, and 9th of December. All right, so it's going to be in between the holidays, but not too close where you're going to miss, Christmas shopping or traveling. So at this event, I actually have $100,000 worth of giveaways that we're going to be doing while we're there. All right, some really, really cool stuff. Everybody's going to walk away with education and more. Now, the 2019 partners, I've got an ICO for you, all right? Or let's just call it a re-ICO. An ICO stands for, IPOs are initial public offerings. This is an initial coin offering, but I managed to get a stash of coins from this company that they are going to re-offer. And this re-offer is going to come in at the $1 level. There's a certain amount that would come at the $1 level. There's a certain amount coming in at $2 a coin, and a certain amount coming in at $3 a coin. To give you an idea, on Tuesday, this was at $6.50. Yesterday, I talked about it, and it was up a little bit. Today, as of right now, I'll give you the real-time price, $7.44. We're talking about a private sale to our group at $1, $2, and $3 levels. So it's kind of a first come, you get that first price.
This is so cool. I had a private conversation with Tom.
And I will get into the details. I will be getting.
So that total may go down before the offer comes. You better jump on it.
Well, yeah, I'm also, I told Rob about this, and I've told Jay about this, and I haven't told the other instructors yet. And so they're obviously going to be able to get into this action as well. So I think it's the coolest thing that we've ever done. We're going to offer it at all the partner levels for 2019. What is the symbol? You'll find out the details once we release that information, which will be in the first quarter of 2019. And all of you will get a chance to participate in this. Before after that, it's at the market price. The neat thing is that this thing is a security token. It's one of the first security tokens ever to be minted. It's fully compliant. All right, which makes it quite different than the majority of the coins that are out there. It also pays a quarterly royalty, which that's what gives it its price tag that it has right now, and the fact that it also it's gold backed too. So there's a gold piece of this, which is why it's been rising and why it keeps its price at like it does. So what's the symbol and all the details? You get that just next year. Next year, like as in very soon. We talked about Keith Fitzgerald's early bird bonus. So last night when Keith was talking, we decided sign up by this Sunday and you're going to receive Keith Fitzgerald's recent volatility mastery program. That's a 5-week recorded program with Keith and it includes the vol trapper button. That's going to go out to all registered 2019 partners. And that's going to go out on Monday. Now, I got something else for you. This is the last bonus that we're offering because it's the last class that we're doing. So we try to beef these things up as much as we possibly can. So 2019 partners, are you ready, Rob? I got something I need you to do. So
okay.
This is your fault. This is your fault.
Why is my fault? Okay.
You said alerts. When you said alerts, I started scribbling down. I went, you know what? You're going to be offering alerts to all of our gold and platinum partners that are signing up for your program. And that'll be during your 5-week program. So that way, Rob will be coming to you in between those weeks, giving you alerts on what he sees and what he looks at as far as what's going on in the world of Elliott Wave. And that would be on the overall markets. That might be on certain ETFs and, of course, certain stocks as well. So, Rob, am I okay to offer that?
Yeah, it would put me on the spot, but that'd be great.
Awesome. I think it would be a great addition to the program. So the partner program is actually 3 different programs.
Performance has been pretty freaking good. So,
and that's why I wanted to do it. I want to do it as an additional, because teaching people. But if you can show them, in between those 5-week program. The real-time case studies that you're doing throughout that'll be great. So we're going to add that to the package. So you have to be a platinum or gold member to be able to receive that because all of our platinum packages, you get Rob's course, you get mine, you get everybody's course, you get everything. The gold package is everything except for when it comes to mastery courses, you'll get my course and you'll get Rob's. And of course, the silver package is all the partner plans and benefits, but just my mastery course. All right. So if you're interested in that, this package has gone up now with the additional bonuses well over $37,000. $95.52 is the top price that we offer. If you want the gold, it's $71.64. If you want the silver, it's $47.76. These are split into 2 payments. They are 60 days apart, so you're not getting shot all at once on this. And again, TomGentile.com/19 partners. If you click on that, it will take you to this page right here. You can see everything I just talked about by scrolling down, including the 3-day Oasis event. And then if you're interested, you want to go ahead and secure your package, then click on whatever package that you're interested in. And once you click on that, it's going to take you to our terms and conditions. Read through that. You click I agree. That's going to take you to our PayPal page. We use PayPal because we don't hold your credit card information. All right, I never want to hold your credit card information. That's not the business we're in. We're in the business of teaching you how to trade. All right, so PayPal handles the checkout. If you have a PayPal account, click on the login and follow the instructions. If you don't have a PayPal account or you don't ever want a PayPal account, right below login, you click on credit or debit card, fill out the information. Once you pay for that, you'll get a confirmation from me, and then you are officially in. Now, guys, we are running out of time on this. I talked about this in the first week of December, and time is running out on this special because when you hear from me, Rob, and the gang in our 2019 outlook, this price is gone. These prices will be, this is going to be $2,000 higher, all right? Because we're going to offer the partner program to whatever number we have left. That we put a certain amount in, that's all we offer. So whatever we have left, we're going to offer that at the new partner prices for new folks to come in, and this price goes away. So if you're interested in it, Now's the time to order it. You're going to forget about it in between Christmas and the holidays because that's what happens. All right. I don't want you to miss out on this best price that we are offering, bar none. All right. Jay, any final questions or thoughts?
Just appreciate watching you boys hang out together. There's that part of the presentation where Rob was talking about pricing not getting too far away from the 10-day simple moving average and such. And one of your systems in your system master, you talked about the new low system, and it's based around the 10-day moving average as well. So I'm looking at a very cool prospect of that gold program for folks being you and Rob as their masteries and such. So,
Hey,
if you guys want to.
Speaking of gold, I got to mention the Mike Perrott story.
Oh, yeah. I want to hear
One
that.
of the absolute coolest, best, I mean, just straight up guys you'll ever meet. I actually had this kid, and he was a kid. He was in his early 20s. I actually housed him at my house for a while he was moving and getting his, because he had moved to Atlanta at the time, and he needed a place to stay till he got his place together. So I let him stay with me. Anyway, I mean, to know this guy, he really was that really far off the wall contrarian. I'll tell you this. He had a bag. I don't know if you know this, Rob. He used to carry around a backpack. In that backpack was gold. He had gold coins. He had Canadian maple leafs that he went across the river from Detroit. He told me this. I went across the river to Canada. He bought I was $30,000 or $50,000 in gold coins. Now at the time, these things were trading around Go back and look. In 2001, they were trading less than $400 an ounce because he was so adamant about the market going down. He also thought the longer term price of gold was going to rise. And he passed away in 2003. I know this. I went to his funeral. They had the funeral up in Connecticut, where his parents lived. And the one thing that I don't remember what ended up happening, but his coins, he actually locked them into one of those lockers that has the little orange key. You put the locker in a public storage. You take the orange key, and nobody seems to know where Mike's gold is.
Oh my God!
That's the thing.
He did walk in. I mean, I still vividly remember him walking in the room because I was in the lobby, and when he walked in, he was wearing a backpack. I didn't know it was full of gold coins, but he was wearing a backpack.
So everybody was on the hunt for Mike's gold, and to this day, I don't know whatever happened to it. But I mean, that's what he did when he was talking about that market going down. And we all had no idea what was happening in 2001. We just had this guy giving some strange predictions. And I mean, he put his money where his mouth is because his money took his cash and ended up buying a bunch of Canadian maple leafs with it. We have no idea what happened to it, but
remember what Mike, I'm sorry to interrupt, but remember what gold did during the financial crisis of 2008 and 9. It skyrocketed then.
It went up as high as $2,000. I mean, he was right by 500% before the pullback, but still it's up 300% from where the levels he was buying at. But you know what? In honor of Mike and his love of gold as an asset to hang on to during crazy times, we have the gold program offer, and we actually have a really cool offering that we'll get into in much detail in 2019 with this cryptocurrency coin. You guys will get all the details on this. There will be a special page that will be only for our group. All right. That will not be public. And once you get that public page or that public offering, then you'll be able to make a decision on whether you want to be part of it. I can tell you in full disclosure, I am a big part of it. I am buying quite a few of these coins. So, but don't worry, there'll still be plenty of them left over at these prices. But I wanted to make sure that our partners had a chance to get into this because I had to pull some strings to get them to lower that price down to where it is. But we got it. We've secured those coins, and we're going to be offering them to our partners and our instructors. So again, first come, first serve. But that's all going to happen first thing next year, guys.
Well,
Again,
it doesn't take a genius to figure out when you can buy a coin at $1, $2, or $3. It's trading for $7.40. What kind of value that is?
Yeah, and I do think gold. I really think gold is still an undervalued commodity, and I think people are going to be waking up and looking at this thing in the future and seeing that
Well, I agree with you. Just tell people to look at a chart. I mean, it's based for how many months? I mean, for at least 6 months, gold is based, and it's just now started to move. So
yeah, yep. So anyway, guys, thank you very much. Merry Christmas, Happy New Year, Happy Hanukkah, Happy Holidays to everyone from myself and everybody here. And of course, if you have any questions on the program that we have coming in for 2019, feel free to email us, support@tomgentile.com, and we'll talk to you soon. Bye, everybody. Thanks, Rob.
Bye. Thanks for having me, Tom.
See you guys.